Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, we have had a slew of different headlines this week and a variety of different data releases, but it looks like we are trending for a positive week. So without further ado, let's dive right into your top 3 points this week. At point number 3 is the labor market, with non-farm payrolls coming in above expectations. The labor market managed to add 178,000 jobs this past month. That was above market estimates. However, that was slightly below what prior month additions were. Now, what this is telling us is that the underlying labor market still shows some resilient strength, but might be cooling at a more gradual rate. And a lot of economists are starting to forecast that really the labor market slowdowns will start to appear in the next coming months as companies begin to grapple with the secondary effects from the tariff policy. At point number 2, this is probably more closer to my heart. It is Take-Two Interactive falling after their quarterly earnings announcement and their announcement that they are delaying Grand Theft Auto 6 yet again. For those of you that do not know, Grand Theft Auto 6 is the latest installment in the Grand Theft Auto video game series. Now, this video game is incredibly important for Take-Two Interactive as they comprise a vast majority of Take-Two's revenue. It's a huge driver for the company. The franchise has to date managed to accumulate roughly $9 billion in revenue just off of that Grand Theft Auto franchise alone. Now, what this does, though, is the fact that since it has been delayed till May of 2026, it has now opened the fall release window for other game studios to go ahead and release their games. A lot of game studios have come out and said that they were pretty much trying to avoid competing with Grand Theft Auto 6 when that was getting released, so that now opens the slate for new games. So if you're looking to get back onto the console and you're really just dependent on Grand Theft Auto, you're going to be waiting until May. Now, final point, top one of the week, and what has been moving markets, it has been Mag 7 earnings. So we have seen pretty much the majority of the Mag 7 now report. This current week, we've seen Microsoft and Meta post very strong quarterly earnings, leading to rallies in the markets. And then on the flip side of things, we've seen Apple and Amazon also post relatively strong quarterly results. However, they've taken a more cautious tone on their forward-looking guidance due to the impact of tariffs on their business models. So overall, Mag 7 earnings have been relatively strong and have managed to be bellwethers in this economy, leading to the overall rally that we've seen this week. Now, that does it for your top 3 points this week. What are we checking for next week? Well, next week, we're going to be all focused on the Fed's rate decision coming next Wednesday. Now, right now, a lot of the futures are pointing to no change, no hikes, no cuts. We're just going to stay pat at the current Fed funds rate. But there has been continued, obviously, headlines in the news of the administration wanting the Fed to cut and others wanting the Fed to stay firm ahead of the tariff price increases that could be permeating into the market sometime soon in the next couple of months. But we will keep you posted on that next week after we get confirmation from the Fed. Now, that does it for this week's video. If you have additional questions, please dig into the written recon review or reach out to your financial advisor with questions. And if you do not have one, please follow our link below and we will get you connected with one. But as always, please make sure to go out and enjoy your weekend, and we will see you the same time next week. Thanks again.